if the calls are right and perhaps the credit market might be rolling over a little bit, what does that mean for the play of the high yield versus leveraged loan world?
Look, I think it's a great time to be defensive. High yield's up 7% for the year. It's been a fantastic run at this point. We think high yield's priced for perfection, and it's a good time to start to play defense.
So how sticky is that money? How much money is going to come out of high yield into leveraged loans? How long does it stay?
Well, high yield is easily accessible. It's a $1.5 trillion market. It's well known around the world, and so there's no barriers to entry. When you compare that to the loan market at $900 billion, it's a much harder market to access. And yet, being in a floating rate, senior secured position, we think is a far superior posture to be taking at this point in the credit rally.
Is CLO issuance cannibalizing what's happening in the high yield space?
I wouldn't say so. I think CLO issuance is really underpinning the stability we've seen in the loan market, right? With 50-60% of the loans being bought into CLOs being 12-year closed-end funds, it actually is a source of stability for the loan market. Whereas we've seen in prior years, high yield can be really quite volatile. Most recently, we saw it with the oil and gas collapse and the effect it had on high yield. Loans were relatively stable throughout that period.
Is it different this time? And the reason I ask that, typically in previous credit cycles, the recovery rate for CLOs has been pretty good. Is it different this time, given that how many things are coming to market, covenant light, especially in this space?
Look, we're very much late cycle. So in a lot of respects, you look at a loan today, and it's really a secured floating rate bond alternative, right? No longer do we have real covenant protection, certainly from the good borrowers. So we recognize that. We're accepting of that. Ultimately, though, it is about being senior secured versus unsecured, and it's being floating rate versus fixed rate.